Today on Seat 11A, we are joined by David Elizaga to present the company's full year 2026 financial results. In this presentation, management provides an update on subscriber growth, profitability, developments within the Prime subscription platform, the company's long-term strategic roadmap, and the increasing role of artificial intelligence across the business. We are very pleased to have him here today. David, the floor is yours.
Hello, everyone. I am David Elizaga, CFO at eDreams ODIGEO, and I will take you through our financial and operational results for fiscal year 2026, covering the 12-month period ending March 31st, 2026. The key highlights of our results are, firstly, I'm pleased to report that our fiscal year 26 results have come in ahead of expectations, delivering an excellent performance for fiscal 26 and marking a highly successful start to our new long-term roadmap. First, looking at our subscriber growth, our Prime membership reached 7.9 million, reflecting an 8.9% increase with 643,000 net adds in fiscal 26, ahead of our guidance of 600,000 by 7.2%. Our cash EBITDA also beat expectations, coming in at 157 million euros, against our target of 155 million. And our adjusted EBITDA increased 29% to a record 172.3 million euros. In fiscal 26, this metric is a key measure as it isolates our true operational performance from the temporary, planned cash timing effects of migrating our subscription model from annual upfront payments to flexible annual with monthly installments. Furthermore, over the last 12 months, Prime-related revenue has grown 10% to constitute 75% of our entire cash revenue margin, underscoring our complete transformation into a subscription business. Moving now to a long-term strategic roadmap, this was a high-conviction move executed from a position of absolute strength and backed by robust data. We are on track to deliver a superior business that will deliver even higher growth rates than before. As we previously communicated, we anticipate accelerated growth between fiscal 25 and fiscal 30, targeting a 78% increase in Prime members and a 50% increase in cash EBITDA. Between fiscal 28 and fiscal 30 specifically, we expect record levels of Prime net adds, adding between 1.5 million and 2 million new members per year. This new guidance is built on a de-risked business model with conservative, low-risk, solid foundations. And most importantly, we have a team which is proven to deliver, as demonstrated twice previously, with other 3-year plans successfully meeting our objectives and guidance. Thirdly, we are perfectly positioned to win in an AI-driven travel ecosystem. eDreams ODIGEO is not new to this space. We have been an AI-first company for more than a decade. We have a strong, unique moat, which combines proprietary product offering with our relationship-based value proposition through Prime. This is unlocking massive new opportunities for us, including using agentic AI as an entirely new customer acquisition channel, improving customer experience and product proposition, and our innovation capability is skyrocketing. Finally, I want to outline our career outlook. For fiscal 27, we estimate 600,000 net adds, which will bring us to 8.5 million Prime members. Financially, for fiscal 27, we are targeting 167 million in adjusted EBITDA pre-investments and a cash EBITDA of 115 million euros post-investments, with expected growth in cash EBITDA kicking in by the fourth quarter of fiscal 27. Looking out to fiscal 30, we plan to nearly double our subscriber base to 13 million members. And following this transitory phase, we project profitability to grow by more than 33% per annum from fiscal 27, reaching in excess of 270 million euros in cash EBITDA by fiscal year 30. In fiscal 26, our Prime subscription model was the primary engine of growth. Cash EBITDA reduced as planned due to the strategic move from annual subscription fee to annual with monthly installments. As a result, our cash inflows have naturally shifted under this model, but eDreams remains guaranteed to receive these funds over the course of the annual subscription, just in installments, rather than as a single annual payment. Therefore, in the transitionary fiscal year 2026, our underlying operational momentum is best demonstrated by adjusted EBITDA, which isolates these timing effects. Demonstrating our excellent performance, adjusted EBITDA grew significantly to 172.3 million euros, representing strong growth of 29% year-on-year. This demonstrates that the core business is scaling profitably, even as we transition our subscription payment options. Prime members reach 7.9 million in fiscal 26, an 8.9% increase versus fiscal 25, 643,000 net adds ahead of expectations. Although the cash revenue margin decreased by 9%, resulting from the move from annual subscription fee to annual with monthly installments, the underlying revenue margin for Prime grew by 10% compared to fiscal 25, indicating that the value proposition for Prime remains strong, with member retention and acquisition costs offsetting temporary headwinds in our content and timing of payment of the subscription fees. It's also worth noting our variable costs reduced by 11% to 388.4 million euros, as the increasing maturity of our Prime members reduces acquisition costs. To truly understand the trajectory and future compounding value of eDO, it is essential to recognize that we are not simply pivoting to AI to catch a market trend. We have been an AI-first company for over a decade. In fact, we were doing AI before most businesses even knew what AI meant. Let's first look at the reality of our customer base today. A large percentage of our customers come from our Prime subscriber base, over 8 million of them. These are repeat customers, not from hyper-competitive performance marketing channels. This retention dynamic is truly unique to us in the travel sector. This brings us to a strong, unique mode we have built around our business. Our competitive advantage is a combination of our proprietary eDO product offering, coupled with a highly relationship-based value proposition through the Prime program. This combination makes us incredibly difficult to displace. When we look at prospective customers, we see that they use AI for travel inspiration and search, but crucially, there is an enormous gap in the market. Today, no booking functions exist within native LLM interfaces such as ChatGPT or Google. We believe AI platforms will not take on end-to-end fulfillment themselves due to significant technical and regulatory barriers. Instead, these AI platforms will primarily monetize through advertising. This evolving landscape opens up massive new opportunities for eDO. First, it allows us to utilize agentic AI as a brand new channel to reach travelers. Second, it enables us to continuously improve the customer experience and elevate our overall product proposition. And finally, leaning into this technology means our internal innovation capability is our strength, allowing us to move faster and smarter than ever before. Here we can see exactly how our innovation capacity is rapidly expanding as our engineering teams become ever more productive through AI. Looking at our core productivity, we have achieved an impressive 47% year-on-year increase. And with our most advanced teams, all of our code is now AI generated and then human verified. This shift toward agentic development has allowed us to deliver 5 times more business features. In our customer service, AI is also making a very meaningful operational impact, driving a 13% total cost reduction in fiscal 26, with 30% of our support calls solved entirely by AI with customer satisfaction unaffected. Our commercial strategies are also benefiting, with a 24% increase in advanced AI-based pricing from fiscal 25 to fiscal 26. Finally, in marketing, the scale AI provides is staggering, producing 30 times more AI static creatives. We have also scaled our dynamic assets, producing 3 times more AI video creatives, and because of this efficiency, we have achieved a 75% reduction in external production costs while successfully keeping our internal headcount stable. In summary, by leading in AI, we are delivering a fundamentally better and more resilient business. Our internal operational leverage is the engine behind this transformation. We will achieve higher growth with a 15 to 20% prime member CAGR from fiscal 27 to 30. We are seeing 13% higher customer lifetime value and stronger loyalty with a 10% increase in NPS. And by fiscal 30, 66% of our volume will be diversified away from the core European flight market. All in all, we are delivering a much better business, and this is reflected in a long-term outlook, which will drive even faster growth. Record prime net adds of 1.5 to 2 million per annum between fiscal 28 and fiscal 30, and over 270 million euros of cash EBITDA by fiscal 30, which is a compound annual growth rate of 33% between fiscal 27 and fiscal 30. And I will conclude by saying that we'll continue our share buyback as we are committed to shareholder returns. A proof of it is that during this fiscal year 2026, we repurchased 64.4 million euros in shares, and from the 100 million committed from October 25 through September 27, we repurchased 32.7 million. We have already amortized 12 million shares, that is 9.4% of the share capital. And at 31st of March 2026, 19% share of eDO market capitalization is pending to be repurchased between April 26 and September 27, representing a yield to our shareholders of around 29%. There are very few companies out there doing the same. This concludes my remarks. Thank you very much.
Thank you, David, for guiding us through eDreams ODIGEO's full year 2026 financial results. This presentation provided an overview of the company's Prime subscription model, profitability development, AI-driven initiatives, and long-term growth roadmap. You can find this video and many more management presentations from listed companies on seat-11-a.com. Thanks for watching, and we look forward to welcoming you back soon on Seat 11A.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.